In this video, guys, we're going to look at trading versus investing. Stay tuned. Hey traders, a warm welcome to you. Right, so trading versus investing. Now, a little caveat out there, a little disclaimer. You know I am biased towards trading, so I'm going to try and stay as neutral as possible with this kind of shootout. I've traded way more than I've invested. I've hardly ever invested. I think I've held maybe 2 stocks for kind of multiple years, and they were small kind of cap oil exploration, all or nothing kind of plays. There weren't anything like I wasn't trading any blue chips or stuff like that. I wasn't investing in any blue chips. So from a stock perspective, now forget about investing in any other asset like real estate or businesses, etc. This is purely from a stock / commodity perspective. Now, I guess, you know, commodities isn't really an investing, can't really invest. I mean, you could invest in gold, but at the end of the day, you're still hoping that the asset increases in value. But let's just stick to stocks. Right? Let's not kind of digress and split hairs here. Let's stick to stocks because most of the people invest in the growth of a company as opposed to the growth of perhaps a commodity. So, trading versus investing. A lot of people kind of come into the trading world from the investing world, right? They've invested and they go, you know, I'd like to make kind of quicker profits. Quite like the idea of trading. So let's have a look whether that's the case, whether you should be investing or whether you should be trading. I think the first thing to consider, guys, which is kind of the boring one, but it's relatively true, is the time you've got. Obviously, investing takes way less time because once you've done your research and you've placed your investments, you don't really have anything else to do apart from analyze the performance of that investment at specific points in time and maybe look for new investments if you have surplus cash to put to work. That's it, really. So in terms of time, it's got to be, you know, an investing win one to the investing there, because, you know, for trading, obviously for day trading, you're going to be there all day, every day. But even if you're swing trading, there's far more involved in it. Okay, so the big one we probably all want to know is the returns. Now, as much as I'd love to say trading, if you look at the whole spectrum of everybody involved in it, probably most people, now this may not apply to you because if you're a trader, you've been in it a while, you've gone through this learning curve and cycle and you're probably kind of clawing your way through and just about kind of stopping spinning the wheels and maybe making some traction. So that's different, but you're a small subsection, right? The majority of people who have, let's say, £25,000 to put to work or 50 grand to put to work will probably have more of a chance of making money or losing less by investing. Now, as much as that pains me to say, because I'm a trader, I feel that trading is the best thing, but let's look at the stats. We know that it's a 90-10 split, right? A 90-10 split for trading, people are losing trading. So if we just look at it objectively, the chances that if all those people go into trading, 90% of people are going to lose, and even if that's slightly skewed, if all those people go into 1 or 2 stocks, if their timing's okay, i.e. we're in the middle of a bull market and things are okay, and let's be honest, over a long period of time, we're at highs at the moment, there've been periods where stagnation, bear markets, but over a longest period of time, if you're in the okay-ish stocks, you're going to do okay. So the point is, most people from a risk perspective are probably better off investing. They're probably better off picking some lower risk investments, sticking their money into them, some of these blue chips, and kind of sitting there making a dividend, riding out some of the ups and downs and ebbs and flows. And as long as their timing isn't drastically off, i.e. they're buying right at the top of a bull market, which of course can happen, they're probably going to come out okay. Whereas trading, because of the margin, because of the leverage, because of the emotions involved in it, unfortunately, as we know, you have to repeat it, the majority of people, even if though I think that's a little bit exaggerated, the majority of people are going to lose money, and they're going to lose a lot of money. You know, the chances of investing your 50 grand and losing all that within 2 years, unless you're in really bad stocks, in which case you've made the obvious choice to go into those stocks. So you're not going to have blue chips going bust. If you have 4 or 5 blue chips, they're not all going to go bust in 2 years, right? The likelihood is almost zero. But trading wise, you can quite easily wipe out 50 grand in 2 years with bad trades and just by normal trading and doing all the wrong things. So, you know, from a risk perspective, it's got to be one to investing again. I've just kind of gone from returns here, but risk, I'm going to say investing for the majority of people. Now, if you're a bit further on in your trading career, you learn to manage risk, you learn to pick the right kind of trades, then this kind of starts to swing more into trading, which is when we get to the returns section. So returns. Now, of course, I know that you can get many hundreds of percent returns in your investing, but to do that, you've got to take higher risk, like I alluded to earlier. If you're buying a small company that's all or nothing, yes, you might make 10, 20, 30, 40 times your money, but you had the risk there in the first place. So that's not really fair to compare, is it? Whereas if you're sticking it in some slower, lower risk stuff, and people might say, well, look at Apple, it's gone up X%. Well, that was high risk at the beginning. Now it's kind of chugging. Yes, we've seen it double and stuff, but relatively speaking, there's still some risk there of 20, 30% drawdowns. We're talking about steady stuff like oil companies like BP or Vodafone, some sort of these chugging stocks that just sit there. United Utilities, stuff like that. So from a returns perspective, if you can trade well, trading absolutely smashes investing, in my opinion, because trading is using capital as a tool as opposed to looking for a return generally. That's the way I look at trading, but I think I'm much of a short-term trader than others, but I don't see it as like, well, you've made 500% this year. No, it's like, well, it's a tool and you're putting a lot more risk, using it as a tool, as margin. So that's just, whether that's right or wrong, that's just the way I frame it. But I think that if you're doing well with trading, you can absolutely smash investing out of the park in terms of returns. Of course, there's more work involved in it. Of course, there's more time. Of course, there's lots of things that come up with. But regardless of that, if you're looking at it from a returns perspective, or which of these two has the potential to make the bigger returns, then trading probably trumps it for me. Yes, you could invest in a few kind of small all or nothing type things, but I still think that well-timed market trades using good strategies in the right conditions with the right mindset and all that stuff absolutely trumps investing all day long. So those are kind of three broad things, guys. The time you've got to spend. The other thing may be capital as well. Trading generally, I think, will be investing on that, because you can leverage up your capital. Yes, the risk comes into play, but if we kind of isolate these individually and we say, all right, so we've isolated time, isolated return, isolated risk, let's look at capital. With a relatively small amount of capital, you gotta, with your margin, of course, that does increase the risk, but you can start to work that and multiply that far easier. I'm very cautious about saying easy, because it's not easy, but in an easier way than if you're investing and just saying, okay, there's my 50 grand, all right, to treble that, the whole investment has got to treble. Whereas trading, you can go, okay, well, there's my 50 grand, right? Well, if I'm leveraging myself up on these positions, I need to make this amount per month on this, so I can treble it in a relatively easy manner. So that's just my take on it. Let me know if you agree or disagree. You probably agree with trading, because the channel's mostly traders, you're a trader, but there is something to be said for investing. We're not discarding it completely, but it's a kind of point of, okay, if you've got that sort of money, where are you going to put it? What are you going to do? So it's worth considering these things: time, returns, risk, and capital. I didn't put it in, but it was capital. All right, guys, take care, whatever you're doing. Bye-bye.